Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachurdes, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming U.S. non-farm payrolls data and the potential reaction in the dollar. So Marios, forecasts suggest the U.S. labor market continued to recover in August. The estimated additional 1.4 million jobs would push the unemployment rate down, which is definitely a step in the right direction. But are we still far off from seeing the labor market truly recover?
Hello, Maria. Unfortunately, yes. So the unemployment rate is expected to fall to 9.8%, but that is just beneath its peak from the 2008 financial crisis, which was 10%. So yes, the labor market has come a long way, but there are still miles to go in this recovery. Now, as far as the upcoming data are concerned, I will be looking at whether employment was impacted by everything that was happening back then. So this report will cover the mid-July to mid-August period. And that was when infections were rising, several states were rolling back their reopening plans, and also some crucial unemployment benefits expired, cutting off a vital economic lifeline for a lot of households. So bearing all of this in mind, I will be watching whether any of this impact employment.
Okay, investors already seem to be expecting a smooth recovery. So what reaction are we likely to see in the dollar and equities if we do end up getting strong numbers from this data set?
Well, I see the risks surrounding the dollar and stocks as a little bit asymmetric. So I believe that the potential disappointment might generate a bigger negative reaction in both the dollar and stocks than an upside surprise, than the upside reaction in case of stronger numbers. So let me lay this out. Investors are already working on the assumption that the recovery is progressing well. So anything that just confirms this narrative might trigger some reactions, but they're likely to be only modest, let's say, or minimal. So yes, a strong data set might boost the dollar and equities, but only a little. It wouldn't be a surprise to anyone. Plus, even if we get stellar data, the Fed will not raise interest rates anytime soon, and stock markets are already priced for perfection. So I don't see a lot of upside in these assets in case of a positive surprise, but a disappointment could bring this whole cheerful narrative into doubt. It could come as a shock for a lot of people and trigger bigger moves to the downside, I believe, especially for stock markets, which seem to me vulnerable to a correction after such a relentless run higher lately.
Marios, thanks so much. And thanks for joining us at xm.com.